Hello everyone, how's it going? In this video, we're going to do an analysis on NIO. We will go over the bull case scenario as well as the bear case scenario. Let's get into it. So the number one aspect we have on the bull case is that NIO is a founder-led company. Bin Lee or William Lee, the founder, he is still running the company. And why is that important? There are two types. One is a founder-based, the other is an agent-based. A founder is someone who doesn't worry about anything but the company. The company is like a child for the founder, and they're not worried about anything, the reputation, nothing else matters but the company. Whereas an agent operated business is worried more about his own career than the company. So that's a plus. Number two, Bin Lee was born on a dairy farm in Anhui province. And why is that important? Anhui province is a mountainous region, and that's where he grew up. And running a dairy farm is a very big lesson in leadership, where you're especially running cattle, leading them to different pastures, helping them throughout the day, taking care of them, nurturing them, at the same time protecting them the attacks of wild animals. That is something where you learn when you're being a shepherd handling cattle. It might be a little bit out of the usual, but that's something you pick up when you're working in that region. Number three, William Lee has a background in this well before NIO. He started his businesses back when he was 21 years old, right in the dot-com bubble. He started off with a few e-commerce websites, especially the Beijing Bit Auto e-commerce company. And this was all auto related. So he had a very good background even before he went into starting NIO. And in this position, he would be reporting different information about the auto sector. He had advantage in luxury with sitting with different types of and big shots in the auto industry, and where he picked up a lot of knowledge and information about the business, which has helped him in running NIO at the moment. Next, we have the NIO battery swap technology. Now, this brings the cost of the car well below. It makes it very easy and affordable for a person to purchase. And NIO takes care of all the battery swapping and makes it very easy for the person to handle the car. Next, it has a very huge tailwind from the Chinese government. We'll be going into a little bit detail in the next few slides, but here, looking at this chapter, NIO gains advantage after Chinese government favors battery swapping for EVs. So, like the US, China also has its own subsidies that it's giving out to electric vehicle manufacturing in order to promote the EV sector. And in April of 2020, it started cutting down on some of these subsidies. So it came back and said, okay, anything that's below 45,700, you can have these subsidies, but anything more, you won't be receiving those subsidies. So with Tesla, the Model 3 qualified for it, but the Model Y, which was more than 45,000, currently at 54,000, could not qualify for that subsidy. And if you look into NIO, NIO is in that same sector of luxury vehicles. But there was a small clause. According to the local media, cars with swappable batteries can still benefit from the EV subsidy without adhering to the price requirements. And that is an advantage which you will get only if you are a Chinese person. That's the favor you're getting and a huge tailwind from the Chinese government themselves. And this is an interesting article. This was published back in 2013 in the Harvard Business School. And it's called the Stanford Social Innovation Review. The title is China's Quest to Adopt Electric Vehicles. Very interesting article. It's only 7 pages long. All the links will be in the description for you to review it yourself. And the article goes over how China had been focusing for over the past few decades into becoming the biggest and the largest automaker in the world. And in 2009, when they reached that mark or milestone of becoming the best and not the best, but the biggest or the largest automaker, they realized that they had a bigger problem in hand, and that was pollution. Right at that moment, they started changing gears and started focusing on the EV sector. And they realized they wanted to get a grab on that and become a major player, a dominant player in the global market. So you already have a government which is focused in this sector and they want to improve their current stand in the global market, but at the same time also want to develop their own companies out in the global arena. Next, you have this sector with regards to the analysis of 100 backers. This is very interesting. And I'll show you, I'll give you a little bit description of this and then go into what's so much relation with NIO. This is an article by Analysis by Tony, an analysis of 100 backers. And in this article, he went over a few hundred baggers in the past few years, and he took out the overlying pattern in all of these 100 backers. What was common in all these companies? So there are a few things that he goes over. And one of the most important one is the fact of PE expansion. So all of these 100 baggers had one thing common, which was PE expansion. And the way he explained is, over the few quarters, if you look into the quarters, the company should have an incremental growth quarter by quarter, not annually, but quarter by quarter. And that is when you will get these PE expansions. So he gave a simple example. Let's assume there are two companies with ticker symbol FLAT and ACC. And let's say the earning per share in the year of 2000 was $4 for each of these companies. So they were making about $1 in each quarter of 2000. And then came 2001. The earnings for FLAT were 1.25 for quarter one, 1.25 for quarter two, 1.25 for quarter three, and again 1.25 for quarter four. So it has been flat for all the 4 quarters. And then overall, if you look into it, they had about 25% growth year over year. So from $4 per share, they came to $5 per share, which is good. Now you came with ACC. ACC had a different route. It was growing on a quarter by quarter basis. On the first quarter, it had a 10% growth, only 10% compared to 25% growth FLAT had, but still a growth. And you had $1.10. Then you had 20% growth in quarter two, still less than FLAT, but still a growth. Then you had quarter three, which was 30%. Now it started to pick up. Then came quarter four, where you had 40% growth. So every quarter it has been increasing. And by the time the year end, both of them had the same $5 per share. But if you look at the stock price, ACC would have a better PE ratio because of the PE expansion that would happen. And let's understand NIO's quarter example. If you look into the revenue section and the deliveries that they are producing over the past few quarters, they have been increasing quarter over quarter for the past 2 years. So if you're looking at these quarters, you can see an incremental increase every quarter. And that's where these factors help in creating those 100 backers. Now, we don't know whether NIO would be part of that 100 backer or not, but at least these factors are there for us. Next is NIO creating a brand for itself. So NIO is looking at itself not just from a car manufacturing company, but they are looking beyond that. They're looking into it, they're thinking about themselves beyond a car manufacturer. They're into apparels, they're looking into logistics, dresses, they're looking into different types of products to incorporate into the daily lifestyle of people. So they are branding themselves so people can adopt them, not just because of the car, but for the products they are working with. And that's where they're trying to create that brand value among their people. Next, the most important thing is a barrier to entry, especially with the power swapping that NIO does. The battery swapping technology requires a huge infrastructure, a huge network of battery swapping stations across the state country, across the nation, where you need to have these battery swap stations that could work for NIO or any electric vehicle that would be planning for. So in order to set up that, it would require a lot of capital, a lot of intense work, and a lot of investment required. Well, NIO hasn't created that network yet, but it is well into that stage, and it's into that nascent stage, and it understands that once they reach that barrier where it's difficult for any other company to enter and take that market share from them. Once they have that network created, it makes it easy for people to change or swap the batteries, but at the same time, it's very easily and readily available for them. That's a huge barrier to entry that NIO will be creating in the future years. Now, let's go into the bear case scenario.